Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for November 29th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES right now. Overall price is holding above our 2185 level. That is perhaps that is the highest PivotBoss key level we have, and it is perhaps one of the most important zones right now. 2185 to about 2190. Very, very important, as that was prior resistance, and price has now pushed through that zone. We've held at highs here. We're holding right now. Any push into this zone could offer an opportunity for bulls to defend and squeeze another leg, but failure to hold above 2185 though, for example, if this bounce fails, that could be significant and could warrant another move back toward value at around 2120 and perhaps even into 2075. So right now we have had a very, very bullish move after the election to the upside. We're holding above resistance, but if we cannot continue to maintain acceptance above 2185, it could lead to a return back to lower prices. But right now, every single pullback has been a great buying opportunity. So I would say that any push into 79 to 85, that zone could offer an opportunity to squeeze. And again, 2240 is a big time upside key level, as is 2214. Those are the next two upside targets to reach. On the downside, we'll see what happens near 79 and 85. On an intraday basis, you've got a pretty tightly coiled price action right now, a double inside day so far, whereas the previous session's range, Monday's range, was inside Friday's range from high to low. And so far, the current range is inside the previous session's range as well. So we have a double inside day. And yesterday was a fade highs, fade new lows day. That's what we talked about. Faded if it comes down here, faded if it comes up here. And you can see it was a digestion day where they faded. This could persist for much of the day. You can see the LV in here. So any push into 2207, 2208 could be a fading opportunity back down. Right now, any push below 2198, 2197's there could offer an opportunity to bring it back up. So short term, back and forth, fade the edges. Very tight price action right now, so you have to be disciplined about being patient and waiting for those edges. All right, let's take a look here at crude oil. Now, in our previous pre-market report, what we were looking for was for price to see resistance between 47.14 and 47.25. And we saw that for much of the day, here to about here. We saw it for much of the day. Eventually, price actually pushed a little higher into 47.65, but flushed back down, back below 47.25 eventually. And look, we've seen a move all the way back into 45.80 or so. So it's been a nice rejection from there. But what I did mention yesterday, the most important point was that we are precisely at the middle of a larger range right now. We're sitting and trading and chopping around composite VPOC right now. So this is very difficult on a swing basis right now to get any traction going. That was the primary point yesterday, and that's still the point right now. Very, very difficult to do anything because you could see it chop this way, you chop right back. That's what it's going to do around value. So right now, it's not a great spot for swing trading. We do know 47.25 is a key resistance level. But down here, 45s is key support. So if price drops into 45s and starts to see rejection, we could bring it right back to value. That's kind of the market right now. But on an intraday basis, it could be a little more directional. For example, yesterday we knew that 47.25 was a zone to watch for resistance. You know, just watch it there, and you can see how it's rejected several times. Tried to hold it here and rejected again and was defended, and then we eventually got away from it. Right now, for the most part, that still remains true, that's a key resistance level, but we're down here trading below the previous session's close 45, or previous week's close 45.96. That's the more important level at the moment. If price cannot hold below this level, say it does this and starts to push back above 45.96, that could offer a rally back toward recent support at the very least, which is 46.60, with a shot at seeing a push into 47.25 and higher. So right now, that's going to be the key level here. 45s are important as well. All right, let's take a look here at gold futures. Here's gold trading range market at the moment on the intraday. And on the higher time frame, you can see that what we've talked about since Friday, especially Friday in the trading room in the limited time that we had there, what we were looking for, we talked about this being a potential rejection day below our 1180 key level. Here's your support to the left. Here's your midpoint of the rejection day. Coincides nicely. So what we talked about Friday morning was, if this is a rejection day and turns out to become a rejection day, then over the next couple of days, Monday, Tuesday, Wednesday, you're going to see bulls defend between 1180 and 1183s, basically, right in that zone. And that's exactly what's happening 2 days running. We could get down even lower into 1180 and still see this thing pop back up. But it's the third day that's really going to tell us something. On Wednesday, are we going to push through 1200 because that would squeeze all of the bears here? Or is price going to run through 1180 and start to run the stops of the bulls that tried to make it support? So that's going to be very important. I think right now we're still in a range-bound market between basically 80 and 1200. And you got to be looking to fade the edges of that larger range. But right now on an intraday basis, we are approaching the lower area of support right now. So into 1183.5 right here, all the way down to 1180, that is a significant area of support to defend for bulls. You could even get down a little bit more, right? But you have to close above 1180. So that is the over-under for the day. Is it this crude close above 1180 or not? That's going to be very important. All right, or rather gold. Okay, let's take a look at the NQ. Trading range market for the NQ as well on the intraday. If we look at the higher time frame for the NQ, you'll notice right here that price continues to hold at 48.80. That's been our resistance. I talked about 48.40 yesterday, and basically that was the high and low of the day, and that's basically been the high and low of most of these days over the last week or so. That's a very important little range there. 48.80 continues to be an area where bears just defend at or above it. Every close above it usually leads to a big swift move. But even these little intraday moves are getting rejected at that 48.80. Continues to be the case. But if these bears that are defending don't get paid, that is, if price doesn't go down, then the stops become at risk, and now we're seeing new highs where we expected to begin with. So I still believe that while 48.80 has been an area of rejection time and time again, I think overall the move is up at the moment until proven otherwise, and there's still a shot to squeeze to highs into about 49.20 to 49.50. At the moment, you got to watch this level right here, 48.40, and then the level below it, 48.30. That's going to be very important. Basically, this low right here, 48.30, and that midpoint, breaking below there would rotate this thing back toward 46.90, or start the structure for that type of move. All right, let's take a look at the intraday time frame. Here's the intraday time frame. We got a trading range market over the last session so far. Here's the previous week's close. Here's key resistance at 48.80, key support at 48.40. The goal right now is to fade the edges. Fade the edges. So if price comes up here, look to fade it back to value. If price comes down here, look to fade it back to value until proven otherwise. Right now, we're in a digestion market, and we could see more of this, but it could be rather dull here. This could be a short-term area that you see defense. That's an LVN. But on the top end up here, anything above the previous session's close likely to be defended, as is the case right now, until we see expansion from this range. So be careful, be cautious as you approach the NQ here. Look to play the edges and be disciplined and wait for those edges. And of course, always mind your risk. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.